Late last month, we came to know that India experienced a 13.5% growth in the April to June quarter of this year, which made it the world's fastest-growing large economy. India also replaced Great Britain as the world's fifth biggest economy. There was disappointment in some quarters as a few surveys had predicted an even higher growth rate. But the long-term trajectory of the Indian economy seems set, with India expected to emerge as the world's fourth-largest economy, overtaking Germany, by 2027. Remarkably, 3 of the 4 top national economies by then are expected to be in the Indo-Pacific region: China, Japan, and India. Foreign banks and rating agencies are increasingly growing bullish on India's growth potential and as a key investment destination, while the global economy keeps brooding over deep pains brought about by the biggest economies, be it in the form of front-loading of Federal Reserve rate hikes or China's worsening construction bubble. Welcome to Savvy Economists. Today we will be looking into the economy of India and how they are serving as a beacon of hope to the world economy. As we go into the video, do ensure to hit the like button, subscribe, and leave your comments below. In a recent speech, Michael Patra, Deputy Governor of the Reserve Bank of India, RBI, underlined India's emerging role as the second most important driver of global growth after China, with India's growth financed primarily by domestic savings. Compared to 18% for China and 16% for the US, India's share of global gross domestic product, GDP, already stands at 7%. This is happening at a time when the global economy has been facing negative headwinds as a result of rising food and energy prices, China's zero-COVID policy, and Russia's senseless war against Ukraine. The Indian economy has stayed resilient partly because of government intervention and partly because of its unique structure. Of course, this is not enough, and, as has been pointed out by many, India's per capita income remains far behind nations that it is overtaking in terms of economic growth rate. A sustained policy effort would be needed to ensure that the present trajectory continues and is not merely a post-COVID bounce. Serious reforms are needed to make India more investor-friendly, particularly at a time when China has run out of favor. As investors seek new venues, Indian policymakers should be bold enough to take advantage of this unique moment in India's political economy. But never before has India's story looked more credible than it does today, with the world in turmoil and India standing out as a beacon of hope. This economic trajectory of India also gives it a distinct place in global politics today. There is a reason why the West, despite its differences with India over Ukraine, has continued to substantively engage with New Delhi. India's ties with the West have grown significantly amid all the negative press that India has received in the West. Where journalists remain prisoners of their short-term outlooks, policymakers in the West recognize the real story: the rise of India as a credible geopolitical and geo-economic player in the 21st century. Even as the India-West mutual courtship continues, India is maintaining its partnership with Russia, whose President Vladimir Putin wants to show the West that despite Western sanctions, he is not alone. He has the support of big powers like China and India. New Delhi wants to keep channels of communication open with Moscow, given their defense ties as well as regional security convergence. But also because New Delhi would like to make an effort till the last moment to ensure that the China-Russia axis does not become a foolproof alliance. The future will be decided by how Russia fares in its war with Ukraine, and India will have little control over the outcome, but so long as a window is open, New Delhi will make this effort. China too finds itself in a bind, and India's stiff resistance to its aggressive pursuit along the line of actual control has put paid to the Chinese Communist Party's narrative that its time has arrived. India's standing up to China has ignited a broad pushback across the Indo-Pacific and beyond. And with a plethora of domestic challenges being faced by Beijing, there is once again a premium on internal consolidation. India, as a consequence, finds itself in a geopolitical sweet spot that it should make the most of. In the past, New Delhi's inability to exploit the extant balance of power to its advantage cost it dearly. A prudent nation should be able to identify opportunities in the existing structure of global politics and shape its external engagement accordingly in pursuit of its interests. Pursuing unrealistic ideational constructs can do more damage to a nation's standing. For India today, the most serious challenge is the rise of China and how it has managed to constrain India's options. New Delhi's priority should be to internally consolidate its capabilities so that it can stand up to Beijing's nefarious designs on a more sustained basis. This should be supplemented with serious partnerships that are capable of adding value to India's growth story. As a large part of the world sours on China, India must become an attractive partner. This requires making some choices that New Delhi has often been shy of. The basis of these choices should not be to make the world multipolar or enhance any chimerical strategic space. The only basis should be how these choices strengthen India's long-term capabilities to emerge as a singular player on the global stage in its own right. This is an inflection point for the global order and India. The country is on the cusp of achieving something dramatic, becoming not only a top-tier economic power that is also a multicultural democracy but also a top geopolitical player that can lead and not simply balance. The choices that New Delhi makes over the next few years will define the contours of India's rise. McKinsey & Co.'s chief executive said it's not India's decade, but it's India's century. A large working population, multinational companies reimagining global supply chains, and a country leapfrogging at a digital scale to achieve something special not just for the Indian economy but potentially for the world are the key elements in place to drive Asia's third largest economy. India is the future talent factory for the world. By 2047, India would have 20% of the world's working population. And with supply chains being reimagined, it has massive potential for India across all aspects of manufacturing. The third is digitization. India has leapfrogged on the digital scale. All those are the raw materials to do something special for not only the Indian economy but potentially for the world, McKinsey's Bob Sternfels told ET. India's finance minister highlighted that emerging economies like that of India are showing full potential to lead the global economy for the next 50 to 60 years. They, emerging economies, are the ones which are robust and are coming out in a very comprehensive way out of the economy. They are the ones who have solutions for many of the issues, whether it is based on food security or commodity prices. These are the markets which will give you both the supply and demand. Moreover, foreign investors, who had earlier shunned India as an investment destination, are returning to Asia's third largest economy and have pumped in about $7.6 billion in 1 month. August marked the first month this year when overseas investors turned into net buyers of India's government debt. In August, FIIs bought equities worth 51,000 rupees crore, a sharp rebound from 5,000 rupees crore of net investment by FPIs in July, when they turned net buyers for the first time after 9 months. Between October last year and June 2022, overseas investors had sold a massive 2.46 rupees lakh crore of Indian equities. When the FII selling was at its peak and many global markets were caught in a bear grip, the downside in Nifty was relatively less because of heavy participation from domestic investors. With FII support, Nifty is now 950 points away from racing past all-time highs. Another revival story is also entrenched in the government's and the central bank's conviction in the inflation trajectory and economic growth. Sitaraman had categorically refused to associate terms like stagflation and recession with the current state of the Indian economy. India's general debt is also in a good position compared to many other countries, she said. Quinn said the Indian economy is progressively getting unlocked because of digitization and simpler tax structure and is poised to reap the benefits of reglobalization that is underway as companies alter supply lines to face the new geopolitical realities. Mint Street on its part has in recent weeks repeatedly said that India's inflation has peaked. Reserve Bank of India Governor Shaktikanta Das had referred to the country's economy as an island of stability despite 2 black swan events and multiple shocks. Black swan events refer to unpredictable incidents that lead to negative consequences. While Das did not list the black swan events, the global economy in recent times was ravaged by the coronavirus-induced crisis, which did not spare India as well, and Asia's third largest economy suffered one of its worst contractions in fiscal 2021. Soon after, Russia's invasion of Ukraine destabilized the global food and oil supply chain, triggering multi-year high inflation readings. India's retail inflation print surged to about an 8-year high in April. But as mentioned, the revival story is intact, and it is coming at a time when investors across the globe are jittery. China had by a whisker avoided posting a contraction in the second quarter as pandemic-led lockdowns and the plunging construction sector wrecked consumer and business confidence. The property sector crisis inflicted serious wounds to China's largest lenders as real estate bad debt surged in the first 6 months of the year. Home sales in China have fallen for 11 straight months, the longest such streak since the world's second biggest economy created a private property market in the late 1990s. According to the PhD Chamber of Commerce and Industry, PhDCCI, India is expected to attract $100 billion in FDI inflows in 2022 to 23. Over the past decade, India has become an attractive business landscape with amenable policy, increasing the ease of doing business. Ease of entry, ease of business and ease of operations are what make any geography attractive to investors. Today, more than 1,000 startups are being acquired and the transaction value ranges from 1 Indian rupee CR to 100 million US dollars, showing that if the scope for innovation and ease of doing business was not in place, this would not have been possible. India is now not only an attractive investment destination but also an important one. G.N. Bajpai further espoused, there is significant focus on diversification of the global value chain. If exports become unstable, India offers a sizable market to absorb the manufacturing units produced domestically. The government has set up centers to ease the regulations to exit startups and businesses. India looks like a floating oasis in the vast desert of floating economies. India's economy is on a steady high growth path for the next 10 years. India has strong macroeconomic fundamentals, faring as well as the major economies of the world. India is facing high inflation, which is mainly due to external factors like the energy crisis and food import costs. India surely covers a ray of hope amidst the trending global economic fallout, and all eyes are on them to know if refuge can be sought in order to save the already collapsing world economy. Will India remain a beacon and stronghold for the economy in the long run, or would they join the multitude of nations already going down a catastrophic end? Let us know your view about the video, and don't forget to hit the like button, subscribe and turn on notifications. Thanks for watching.